Carter Cow Trading as a overall Facebook group. Hope everybody's doing very well on this Tuesday morning. As we go through and get everything set up with the charts and everything else like that, I wanted to make sure I go ahead and get done with the disclaimer. Then after that, we'll go ahead and get started from there. I'm not a CTA, so I'm not going to tell you whether to buy or sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. I understand that Forex involves risk. So it involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that you end up making money yesterday. It's not promised that you're going to end up making money today. So with here, what we're going to end up doing, you're basically joining me live to look for Forex training analysis, and also be able to make sure that you end up sending some questions to the overall chat box about what's actually going on within this overall time. If you want to understand some of the things that we have going on, always you can go to cartercowcapital.com/start here, be able to hop in. With that, please do me a favor. If you're interested in being able to hop inside of our boot camp, which is going to end up being February 22nd to February 26th, make sure that you end up going to bit.ly/believe in yourself bootcamp. Believe in yourself Forex. I'm going to end up placing that inside of the chat box as well. I'm going to make sure that everybody ends up having that as we go through and place in all of this information. So as I place in these last little tags so everyone can be able to hop in and be able to go through the overall page. I'm excited to be able to talk to everyone today. I ended up looking at my schedule wrong, and I will admit that. What ended up happening was that I'm still a part of somebody else's course schedule. I guess that's the best way to be able to say it. And what ended up happening was that I was expecting that my time was going to be a little bit different based off of what I was looking at, and it wasn't that case. So, of course, we will do this. Live, and then after that, we'll go from there. Tyrone, what's going on, big dog? How you doing? I hope everything's going well with you. And we'll end up seeing how everything's going from there. So let's go ahead and take a look at the charts. Yesterday we ended up taking a look at, I think it was US 30, I believe, and we ended up doing very well when it came down to that overall trade, and being able to get a win off of that one. So we're going to take a look at that one first. I'm going to be very short on my time when it comes down to this looking at the economic calendar. There's really no use to being able to focus in on that if we can be able to take a look at how well we end up doing for other things and then move on from there. So let's go to US 30. I'm going to talk about this trade real quick and what we end up doing from there. And then after that, we're getting everything else. But to kind of break down what we end up talking about from that Sunday to Monday trade, essentially what ended up happening was this. We end up saying that US 30 is expected to be able to push up to 32,500, possibly up to 33,142. But this market was basically doing this V shape after they end up hitting the 50-day moving average, which is this red line, bounced right back up from that overall level and then started to push up. So we made money when the market went down. We made money when the market basically went back up at this particular point. Now, where's the next point where the market's going to end up going? So what we end up doing, this is our larger fib. So what we end up doing, we're basically making smaller fibs. If you not understand what Fibonacci is, please make sure that you hop in with one of our boot camps or one of our free webinars. And we're seeing that we're basically in the push zone of this last movement on Sunday. So when this market actually ended up breaking this purple line, which was a counter trend line, the market ended up starting to make a V-shaped move towards the upside. From there, we end up placing our entry right here at 32,000. I think it was 32,280. We ended up placing our stop just below the swing low, which was at 32,230, and we were going after 31,335. The reason why we were going after 31,335 was because that was the fib low or the fib high, the extension that the market was expected to go to from this short fib perspective. Now, with that being said, this market basically went up, and I think it ended up hitting our take profit zone. I think I ended up sending a message out that was right around 10 o'clock yesterday. And now, what do we do now? Essentially, we look for another fib, and we're trying to. We have a new ABCD swing that's about to happen at this particular point. So we go back to this swing low, we go up to this swing high, and now we're seeing what's happening with the overall market. So answer this question, everyone that's looking out here: is the market expected to go up, or is the market expected to go down? Now we're seeing what's happening with the overall. Is the market expected to go up, or is the market expected to go down at this particular point? Market expected to go up, or is the market expected to go down? For the people that end up saying down, you're slightly right. And the overall thought process would be that the market would need to retrace a little bit to be able to make a move back to the upside. Essentially meaning that if we're looking at what's happening with this overall move, I expect for the market, after this market end up hitting the upside move, I expect it to be able to fall just slightly before starting to make a move back to the upside. Okay, so essentially what we're looking at is this. We see that this market is starting to overall retrace. We can see that the 2 hour at this particular point getting closer to the buy zone, but it's not in the buy zone. We can see that if we look at the ADX is still above 20, and it's still saying that the bulls basically control the overall market. So the slight little retracement will end up being smaller. We look at what's happening with the RSI. The RSI is basically in no trade zone, but it's been hovering around this overall area. So we're seeing a little bit. I would say we're seeing a little bit of divergence. We're looking a little bit of divergence. We expect the market to be able to fall, and then after that, start to push back up. So my question, the question would be, should we be looking at being able to trade in this position? Right now, I'm going to say no, because if we would have did it, we should have got it at a high point when the market basically ended up hitting the extension and starting to move on. I will wait. I'll wait to see what kind of happens, and if there is a drop, you'll really see it on the 15-minute timer. We end up getting a high price from that overall position, and then after that we can be able to go from there. I'm not necessarily interested in being able to chase this market at this particular point, because I am trying to look to buy, really and truthfully. So if I miss on a small position going down, it doesn't hurt me compared to trying to go up for a long-term position and actually trying to look for an actual buy at this point. Okay, so that's what I'm looking for overall when it comes down to this. I am looking and I am interested in being able to buy compared to being able to sell at this particular point in time. But if the market does fall, where's the market going to end up going? Typically, the market always falls down a point of control. It typically goes to the point of control at this particular point. We look at it from a 15-minute standpoint, and that line was there a second ago, so that must have meant that it was not enough data. We'll always go back to our overall zones and talk about where the market basically ended up falling at for those overall zones. The last time that it ended up falling inside of a zone that high, or that area where the market kind of accumulated a lot of pricing and everything else, is basically at 31,000. So the question is, will it drop 300 points before actually starting to pick back up and make a move to the upside? I'm not interested in being able to sell that to be able to know. I'll wait for that one. Let's go to NAS 100. And I know we're kind of going backwards. Typically we do these last, but I want to go ahead and get through these because I want to make this a relatively short session. If we look at what's happening with NAS, it's pretty much the same thing when it comes down to this movement. This movement is already broken a new high. It's already in the push zone. The expectation is the market going to end up going, that the market on the daily is going to end up eventually going up to 14,320. Okay, that is an expectation that the market will end up eventually going up to 14,320. So essentially, every low, every dip in price, all you're trying to do is basically buy from those positions, and then after that, you're looking at being able to just hold until you can be able to get to 14,320, which is once again a new all-time high of this overall market. There's a lot of all-time highs happening. You look at Bitcoin, you look at Ethereum, you look at what's happening with NAS, you look at what's happening with US 30, XPX 500. It's a new day when it comes down to a lot of high movements. There's going to be a crash at some point, but right now the market is basically moving up and making higher highs. So we take a look at what's happening with the 2 hour. 2 hours is basically in a position where, as my son basically hops in. 2 hours, here you go. Here you go. Is basically in a position where. Ooh. Wow. Look at that. Look at that. It's so cool. Look at that. Oh shoot. Hold on. There you go. So essentially what we're looking at is this. This market is expected to go up to 13,925 as a short-term move. Currently the market has been kind of stagnant when it came down to momentum, movement, and basically being in a no trade zone. So on this one, essentially what we're looking at is a little bit of consolidation, trying to figure out what this move is going to end up being. For the last few hours, the market has not basically moved a lot. We talked about we ended up making a sale when the market basically ended up hitting that overall zone the last time. The question is, where's the new zone? We don't know where that new zone is. We know that it's going to end up being a new high. That high is expected to go up to 13,925. Currently, right now, we have basically hit off of a overall point of control at 13,661. So anything around 13,661 will probably end up being a good price to be able to get in towards 13,925. I'll place my stop below that overall zone and be able to get in from there if you could be able to get a low price. Currently, right now, we're not in the buy zone. Once we get to the buy zone, then I'd be interested in being able to buy at that particular point. But for right now, I'm not interested in being able to go from there. JD, what's going on, Javan? I hope everything's going well with you. Tell the family I said hey. As we go through and be able to place that in. So that's those two. Let's go ahead and take a look at what's happening with the economic calendar. Let's see what's going on for this week. Today is Tuesday, so we've already had some information, and we talked about this earlier. The market's going to end up being pretty slow from economic standpoints. European Central Bank is going to end up speaking to Austrian Westpac. It's going to end up having a consumer confidence that's going to end up happening at 23:30, which is going to end up being basically 11:30. So no news today, so really no reason to be able to pay attention to that. So the question would be, okay, well, what has happened with overall pairs? I want to look at the euro versus the United States dollar. We talked about how we expected for that market to start to push up and be able to make a move off of that, towards the upside. We'll take a look at the U.S. dollar index as well. But all we wanted to see was this right here. And that's exactly what ended up happening. The market basically ended up pushing past this overall purple counter trend line towards the upside. Now, the expectation was that we thought that the market was going to end up going to this overall zone and being able to buy. It just missed our overall spots for limit buys and everything else like that. I probably should have placed it right here because you see that wick was the overall high, that overall move. So we missed out on that just slightly. The market has moved up about 150 pips since then. It's not necessarily a bad thing. I will say that. I want everybody to understand that's not necessarily a bad thing. It just means that now the Eurozone has started to pick up a little bit. So when we start to look at this trade from a smaller time frame perspective, we can be able to get in and be able to get in with confidence. We're looking at for say overall the extension of the daily. Let's see how many pips do we have left. About 263. Okay, so we can easily do a 1 or 2 for the risk reward ratio. I will look at that from a 2-hour perspective on being able to get in. We're probably not going to see it at this particular point because the market has breaking out. Remember, once you end up breaking out, then there will typically end up being a retest. That retest will end up happening sometime later on today. So we have that movement. The market has broken past its counter trend line. Now the thing is, we want to see the retest. So once the retest starts to happen, and that's when our entry is going to end up being. Now, a couple things that could happen if the market does fall down and does go below the overall trend line, as long as it holds at the support levels or the next zones where we're paying attention to, where price basically ended up falling at, which was right around here, we should be good. But this looks like a head and shoulders pattern that's already done broken to the overall upside at this particular point. And we end up doing, let's see, we end up making a trend line towards this overall spot, push this up towards the overall high. The market could go up to these highs right here. The market could go up to these highs right here. Which is a support right there. Market could go up to that spot before actually moving and doing anything. So I expect that that's our zone. And I guarantee you look at it from a 2-hour D extension perspective, you'll probably end up seeing that the market could get to that actual spot right there. Let's take a look at it from a 2-hour field and let's see what's actually going on. From a 2-hour field perspective, there goes our ABC movement. The extension is expected to go up here, 1.12116. Okay, so if the market falls down, and starts to push back up, the first initial movement where the market will kind of hold at will be at 1.1162, and then after that, obviously, I think the next zone that we'll end up paying attention to will basically be at 1.2150 as the overall number from that perspective. So, looking for a little bit of a retracement. If we can get that retracement, then after that, I'd be interested in being able to buy. Speaking of that, I think it'd be a good point to go ahead and take a look at the U.S. dollar index to see what's happening with that, and then after that we'll take a look at gold and take a look at what's going on with everything else. Let's see. U.S. dollar, what did we say yesterday? We said that the market was going to continue to fall. We wanted to see if the market can get into a buy zone area, and then after that look to be able to buy. Currently, right now, the market's at a retracement level, or basically retracing like we ended up saying before. Currently, right now, we have to break past that outer trend line before it basically turns into a bullish type of movement. So at this particular point, the market could even fall back down to these overall lows that end up happening right here before starting to push back up. So I'll kind of wait on that for a second before making a decision on what to be able to do at this particular point. So I'm gonna end up waiting on that. Let's go take a look at gold. Gold, what did we say? We said that the market was going to end up basically falling down, holding at one of those zones, and you can catch it at the zone for its overall high. Then after that, be able to get into it. Essentially, what ended up happening was the market ended up breaking past the 1820 level and then pushing back up to the 1843 level. So, if we're talking about downside movement, the downside movement was expected to go down to 1766. I said I wasn't interested in being able to get in because this market was at a point to where it was in a no trade area yesterday. The no trade area was right here. At this particular point, what am I waiting on? I'm just waiting to see how this market is going to end up reacting. Right now, there's no rhyme or reason to be able to jump in without necessarily losing money or making money at this particular point. So I'm going to stay away from that one. Okay. We got to find a pair to trade today. Let's see if we can find some. Let's go to TRADEWITH. Let's see if there's anything that we can be able to look at. We got to find a pair to trade today. Let's see if we can find some. Let's go to TRADEWITH. Let's see if there's anything. We'll go to our Forex screeners. Take a look at our rally Momo. This is what we're looking at. We see pound yen is at 2060. It was at 20.6. So the market has started to move. We see that the ADX is basically in the sell zone. The question is, are we looking at selling or looking at buying? We see the same thing with the pound Australian, where the market is basically pushing right there. We can see the New Zealand dollar, Australian dollar, where the market is at 19.5, but it's at 56, which means that we have scalping opportunities to possibly buy, because we see that the Euro United States dollar is at 1933 and it's at 41% on the daily for it being able to move up. So let's take a look at the New Zealand dollar, United States dollar. Maybe interested in being able to scalp the market from there if we can be able to find something when it comes down to that. Probably may not get the best price, but may get something out of that. Let's go to the daily. We'll take a look at the weekly first. Weekly is basically retracing at this particular point. And get rid of those purple circles. Market fell back down, hit this overall support. We're expecting that the market is going to go to 73 at this particular point. Currently, the market is about 80 pips away from 70 pips away from that overall spot towards the overall upside. The weekly is still at 36% when it comes down to the stochastic, which really doesn't mean that much as of yet. Currently, right now, we've seen that the market basically fell down to that overall support, and from there, we're looking at buying opportunities from this market basically pushing up. But it did fall down 3 weeks ago, all the way back down to the 72 level where we thought it was going to end up going. If you end up getting into that and you end up holding on to that price, congratulations, as this market is basically moving from there. I think I ended up taking a quick little profit off of that, and did not do much with it. So we can get rid of that. Let's see. Here goes our point we need to pay attention to right there. Go to the 2 hour. So this was our actual low. Let's see if there's a field that's still out there that has not been completed. So currently right now, market went to the 618, starting to slowly move up to the D extension. D extension is expected to be at 73.60. Currently, right now, the market is in the sell zone at this particular point, but we've seen this small little consolidation area on the 2 hour that has finally broken, and we're seeing a retest off of this one. This is a actual buyable position right now as we speak. Let me explain why it's a buyable position. So remember, we always talk about in our boot camps and everything else like that. We end up talking about when the market ends up basically when the market ends up going through a overall consolidated move. We have our support zones that basically end up getting hit. We have our resistance areas that basically end up being in the same position. So you want to sell at resistance, you want to buy a support. But once you end up having a breakout, then after that you end up having a retest. So here goes your breakout, here goes your retest that is happening right now as we speak. Now is the market in the buy zone? No, the market is not in the buy zone. But in consolidation, the stochastic really doesn't mean that much of anything when you're taking a look at it. What's up, baby? Can you see it? Yeah, stochastic really doesn't mean much of anything. Now, what this also means is that if we look at this, we can't necessarily risk the farm when it comes down to trading this, but we can look at being able to be a little bit more aggressive on this overall trade. So I'm going to go to the 15-minute timer, see if the market is in the buy zone. The market is in the buy zone. Do we have a counter trend line break at this particular point? Let's see. Do we have a counter trend line break at this particular point based off of this movement? Not as of yet, if we wanted to be aggressive, but the market is in the buy zone. We see that there's a natural support level that has been kind of pushed at 71.16 or 72. I definitely place my stop below this overall level right here to give it a little bit of room if we're looking at being able to buy. Now that based off a 15-minute movement, we can also be able to place our stop below this overall low at 71.92. Basically, let's say 70. We end up saying 71.85 as a overall stop. Let's do that. Let's say 71.85. We end up saying 71.85 as a overall stop. 71.85 is our stop, which is 43 pips away. Okay, 71.85 is our stop, which is about 43 pips away. Let me pull up my trade tickets. And I'm gonna go through this with y'all with this, and this is something that we end up going through our boot camp and masterclass and everything else about. This is going to be the last thing that we end up taking a look at today, because this is an actual trade that I am interested in being able to take. We're going to go through, talk about what's going on with the trade, and be able to go from there. So I'm going to give you an example of what we end up doing. So this is our FMA trade ticket, being able to take a look at what's happening with the market overall at this particular point. So this is going to be an active trade that's going to end up being today. Today is the 9th. For this overall trade. So we break this down. We end up saying, we end up looking at the chart. We end up saying that the daily, what's the overall move of the overall daily? Currently right now, if we look at the weekly move is still considered to be bullish. Okay, so the weekly is up. At this particular point, where's the market at this particular point? The market has broken the counter trend line, and the move is expected to go to the upside. So I would consider that to be a zone 2 type of trade if we're looking at that from a weekly perspective. We'll look at what's happening with the daily. Daily is above this overall field. It's and has broken past the overall gatekeeper position. At this particular point, that would be considered to be a zone 3 type of trade, being able to go from there. We have this large position that we expect the market is going to end up going through, which is basically 73. There's a D extension at 75, basically 50 for the overall position on the daily. If we're looking at scalping the market from a 2-hour perspective, we can end up saying that we're interested in being able to go only to 73, which is 80 pips. So I'm going to give you 3 different ways to be able to look at this, or 2 different ways to be able to look at this from an actual position and being able to go from there with low risk. Okay, so quick questions. The quick questions that this thing is going to end up asking you. First one is the stochastic. It's a stochastic in the buy zone. The answer is no. Do we have a counter trend line break? That answer is yes. Okay. Our stop in this one is basically 45 pips at this particular point in time. Let's say we're going to end up doing this with 5,000 at 5%. And when it comes down to the overall trade, that means that we can go in with 5 mini lots to be able to go from there. So our risk on this trade will be $250. All right, from that overall position. Now, our take profit on this, if we go with this first movement, we end up being 74 pips. Okay, 73 pips at this particular point in time. So we place in 73. Okay, wrong one. If we go 73 pips, we'll probably get a no on this overall trade. Let's see. Yeah, we got a no for it being able to enter the trade. That's scalping the market. If you're, but it's okay to be able to scalp the market on the actual spot. So anything to 1 to 1.5 is actually okay to be able to scalp. So if you're interested in being able to go from that, you can do that at this particular point. If you don't have $5,000 in your account or anything else like that, obviously you can lower your overall risk percentage. Now, if we go out to the 2-hour D extension, that's expected to be able to go up to this point. Now, if we go out to the 2-hour D extension, which is expected to be at 73.60. 73.60 is at 134 pips. So we go 134 pips. That could be $744 for the overall gain. You could take that because that's a 1 to 3 risk reward ratio. I like that a little bit better from this overall spot, being able to go in. If you really want to go towards the daily D extension, which is at 75, obviously that's a little bit higher. That's to be a zone 3 type of trade, taking that long term for this overall movement. That will end up being about 330 pips. You go 330 pips at this particular point. That will end up being a 1 to 7 risk reward, where you could be able to possibly end up making 1,800. That's not even being able to. Add on to the overall trade. I'm going to go after the 134. I think that'll make a lot more sense when it comes down to being able to do that. Obviously, bless you. If the market ends up going up to, this 7,300 area, and then after that starts to fade off, then after that we can keep our eyes on it. The reason why I'm taking this trade is because I see consolidation. This market has broken past that consolidation slightly. We go and look at this whole level from a support resistance perspective. We see that we're basically retesting this overall area. Let's see, hold on, let's do this. We count that as the high. We're not hitting. We're actually at the top of resistance, being able to fall. I would consider that to be support. The market has failed down a little bit lower. We use that. Okay. Let's see. Hopefully, I'm not talking myself out of this one. Let's see. We got 1, 2, 3, 4, 5. This would be the resistance at this level. This is what I'm going to do. We have this one set up. I'm going to wait and see this market break it, or fully break this counter trend line break off of the 15-minute time. If it does it, and it does it convincingly, then I'm going to go with the trade. Right now, at this particular point, if the market keeps on falling down in this overall position, and it doesn't use this area as a springboard, if it doesn't use this area as a springboard, and it breaks below this overall area, then I'm not interested in being able to take the trade. So I'm gonna look at this one. I'm gonna pause on being able to take it, but I already know what my entry point is. I already know what my stop loss is gonna end up being and everything else like that. Stop loss is gonna be at 71.85. So all I'm looking for is to be able to see is this market gonna end up holding this overall position. So here goes 71.85. I'm gonna wait for that to be able to happen at this particular point. We can get better value with this market basically falling down, especially it can be able to hold these actual points. If it breaks below that overall point, then it's going to fall down to this point right here, and then we may not, it may not even be a reason to be able to get into this trade at this particular point, based off of stretching out and looking at that other data that was basically given to us. That'll also put the market into the buy zone if that happens. So I'm going to wait on this one, but my eyes are on this one. This is one of the trades that I am interested in being able to get in. New Zealand dollar, United States dollar. We can see once again there is momentum in the overall market. The market has been pushing up the stochastic, and the stochastic slow is in a no trade zone area. So that's making me a little bit more cautious, because if I stretched out my overall, I stretched out this overall area, and we see the natural resistance areas that basically end up happening. We have natural resistance right here. We have natural resistance right here, right here, right here, and the market is falling down into that point. We have not broken out and held past that point. Broken out and actually pushed past that point as of yet. So I'm going to wait for right now. But my eyes are on that one. All right, so that's it for today. We ended up having a trade yesterday. We don't have a trade today. We end up keeping our eyes on it, and then after that, go from there. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure that you subscribe to Trade with Travis on YouTube. Any likes or anything else like that will definitely end up helping us push on what we're doing back up, and being able to go from there. Once again, if you want to hop inside of our boot camp, you can go to bit.ly/believe in yourself Forex. Be able to hop in that and be able to go from there. Like always, plan your trade your plan. I'll see everybody tomorrow.